Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, September 24th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES continues to hold above the previous month's high price. That's here around the 29.17s. That's a very important level. You can see how it was resistance, failed new lows, and then we got the upside push through that zone, so a nice little squeeze. We're now seeing the pullback, and here so far we have seen price hold and trade mostly below the 29.29s, 29.30s throughout the overnight and pre-market, and so far that looks like there could be a squeeze coming if price continues to hold that zone. So again, what the key levels here to watch is going to be the previous week and previous sessions close at 29.32 quarter. The ability to push beyond that zone should allow more upside price discovery. Overall, this market has been very bullish, mostly led by blue chips like the YM, but this one has reached new highs as well, and every time it pulls back into the trigger zone it usually squeezes. So again, as long as price can stay above 29.20, generally speaking, the market likely has more upside. I mentioned before that 29.50 to 29.65 could be in play, and as high as the primary target up there, which is that 29.85. So we have much more upside here that could be seen heading into the last week of the month and the last week of the quarter. But overall, we see that we have uptrending price structure. We continue to trend higher, so even if we close the month kind of quietly here, next month if we pull back into the pivot range again, it could be another buying opportunity for another continuation higher. So until that structure is violated, we have to continue to look to defend rotations for more upside price discovery. So that's a look here at the ES. If we take a look at the NQ, you'll notice it's similar, but this one has yet to really squeeze. Tech has underperformed this month after having a pretty stellar August for the most part. We are at a counter trend low here. I've mentioned before that the likelihood of a squeeze is very good. We have an inside value developing for the next month, and the next month pivot range is very narrow compared to what we've seen before. And typically speaking, when you have a narrow pivot range, you tend to see explosive breakout type of movement. Narrow there, narrow there, narrow here. So when does that breakout start? Does it start right away at the beginning of the new month? Do we see a failed new low here that starts it early, perhaps this to end the week strong? We'll see. But overall, this 76.40 level is going to be very important. Once price is able to establish acceptance above that zone, it's likely a big stop run day and a major continuation. As long as price remains above 7,400, I mean, we could theoretically see a push as low as that again, but as long as it remains above that level, we likely continue trending higher until proven otherwise. So right now, inside value heading into the new month, that could be explosive for the new month in either direction. So it doesn't have to necessarily be to the upside. An explosive breakout can also occur to the downside. Anytime you have an inside value, it can happen in either direction. And the fact that we've trended up for many months opens the door to perhaps seeing a downside break like that for the first time since this uptrend really began. So we'll keep an eye on this pattern as it develops heading into the new month of trading. Here's a look at crude oil. Crude oil is above recent highs. It's above the 71s, the 70s, the 70/50s, that whole zone that had been rejection area for so long. With the uptrending market, it's finally breaking above it, but it has been very unconvincing overall in this up move, but it's still holding above that zone. This 72.30 level is very important. Its prior highs, there was a box here that tried to hold, and that's when the stops came out. So this could be the last line of resistance for bears right now, at least in the near term. And if bears are able to defend 72 30 and perhaps on an intraday basis push price back below 71.80, that could open up a pullback, maybe not too far down, but maybe back towards 70 and the previous month's close. So far, price has traded around that level, the previous month's close, down, then back to it, then down, then back to it, and through it, then back to it and away. Perhaps we see one final move back to it to end the month. So right now, 71.80 is the level to watch intraday, and keep an eye on 72.30 on the upside. Now let's take a look here at gold futures. Gold continues to compress, significant compression overall. If you look at it down here, this is a 20-day range. So if this is a very, very narrow 20-day range, and look at how the 20-day range is compressed. Right now the 20-day range is 28 points. Normally it's 38 points over a normal 20-day range period. So you can definitely see that it's quite a bit more quite a bit less than normal. When we get to around this level, we're usually very, very close to a major phase of expansion. And so that's where we were here, major phase of expansion, same thing here, and now we're back at it again. Perhaps we could see a major phase of expansion again. Now, how far do we usually go? You know, just looking at the recent two cycles, we could easily go 70 handles of range. At least 70 handles of range. That's what we've been seeing here on these recent rotations. We can get as high as, you know, anywhere between, I'd say, 65 and 75 handles of range. Now, which way are we going to go? Obviously, this market has been going down. Every time it thinks it finds footing, it goes down. So I'm still in the it has to prove it to me on the upside before I can really jump in. It hasn't really proven it. And so I continue to watch the 1190 level, and I also watch the 1220 zone, because any failed new high here could trigger a significant decline, much like this one did, and any other type of failed new high. Likewise, any push through 1190 could spark and trigger a significant stop run day, very similar to that type of day there or this one there. So there's a couple of major days here to watch out for directional bias and cues, but overall this range is about as tight as it gets. I believe we have FOMC later on this week. That's going to be probably around the time where we see some sort of directional conviction. So continue to watch gold here. Lastly, let's take a look at Bitcoin. Bitcoin here has continued to honor the 6,000 level. It's doing it by any ways and any means possible. I mean, it's basically just barely holding on to 6K. We have severely downtrending highs, and again, this is something I've noted since the very beginning, and that usually that descending nature is very, very bearish. It would take something significant to break this trend, and really it really just needs to break back above that high, and that could really trigger something where you start to work back toward this high, and then perhaps even as high as this high, and then who knows what can happen from there. But again, this market has continued to hold this level by any means necessary. We have recently seen a rejection day followed by an absorption day, a stop run day, and this is so far a retest after stop run here. You have a great retest right at the 6,600 level, and you know, even if it's a little bit lower, 65, this is a great short-term area where bulls are going to look to defend for a shot at squeezing back toward the previous month's close. And again, I really wouldn't go much farther than that at the moment, but that's a nice short-term swing move. And if you can get back above this zone, that's where things really get interesting. But again, this market has been lacking enthusiastic upside energy. So we'll see how this continues to progress. All right, that is it for now. Good luck, trade well, happy Monday, and I'll see you in the trading room.